can directly, like I said, to a member of our team. Alternatively, just head over to our website, a1trading.com, and you can scan all the different features and tools that we offer over there. And all of that to say, am I currently long gold? Yes and no.
What?
So while I don't have a short-term momentum style trading position open on gold, I am doing a little bit in the options market through selling cash secured puts on GDX, which is the gold miners ETF. Now, what I'm doing here when you're selling cash secured puts is you're essentially saying I'm willing to buy an underlying at a certain strike price by a certain expiration date. And I've got the 21st of August, 2026 puts sold $68 per share. So if price goes down to that level, then I'll get a chance to buy shares at what I think is a pretty decent, attractive, longer term entry price. This is different than my standard momentum trading. This is more position longer term trading that I'm doing because I think long term gold looks attractive at these levels, but short term I'm a little bit more neutral in terms of like a tight stop, trailing stop approach. I'm just not quite there. I'm watching for some levels, but let's take a look at what's holding me back on the other side of things when it comes to gold, because while score is increasing and looking a lot more attractive here, I'm waiting for that technical breakout. Fundamentals have shifted dramatically for gold in the last few weeks. And with consumer price index and producer price index numbers coming in really soft versus expectations, this adds fuel to the fire when it comes to my rising bullishness on gold right now. Non-farm payroll numbers were an early sign that, some of the fundamentals were shifting here. We had a huge negative surprise on the jobs report, and gold loves a little bit of softness in the labor market. So perhaps that continues to be a theme. That said, inflation cooling off is a strong counterparty or a counter to the idea that, okay, the jobs market's showing some positive signs. Well, inflation's cooling, and a cooling inflation story, if that continues, and that is very dependent on what happens with the Middle East and oil, etc. But we're seeing some early signs that inflation may not be as big of a worry as previously expected. And that could mean rate hikes are less likely to occur. And we do see that kind of showing up in the 2-year yield, which has been softer in the last 2 days following the CPI and PPI reported numbers, which shows probabilities for rate hikes may be cooling off just a little bit. We may still see hikes later this year, but very unlikely to see rate hikes in the coming meeting that we're seeing in like 2 weeks' time. So in the short term, I do think that this is a bit of a booster to gold, but if you're watching precious metals, you want this chart to crack lower and really move lower rather than just these little short-term bursts. If you want to see gold really sustainably move higher, this I think is the chart to watch. You want to see oil come down, you want to see yields actually trend lower, lower interest rates, etc. are something that gold pretty much always likes. But until that happens, I still think you are in a technical downtrend that needs to be respected. Today's video is sponsored by Ola Prime, and I wanted to share a few of the things that they offer to their traders. They recently had an audit done by Deloitte and came out with payouts that averaged under 1 hour. They also offer up to a 95% profit split. They offer direct and challenge accounts. And for the swing traders out there, who I know is a lot of my audience, they do allow holding through news events as well as over the weekend. They also offer one of the largest number of trading platforms out there for traders, so you can choose the platform that you like to trade best. It's also worth mentioning that they offer both futures, Forex and CFDs, and so much more. And finally, one of the most attractive offers that Ola Prime has is that their prices are very, very low relative to competitors in the space. And when I say low prices, I mean it. Check this out, $103 for a challenge on a 25K one-step Prime challenge. And if you choose the 2-step option instead, you have $83. Of course, they offer several different account sizes, etc. And these are all simulated trading capital, so there's no real risk to capital at stake, and you put down just a small amount of money for the potential to get real payouts. And with our referral link and promo code that you can see on the screen right now, that A1 Trading, you can actually get 35% off any of their challenges. So if you're interested in exploring Ola Prime further and seeing if it's the right firm for you and your trading, consider using the link in the description down below. below and the promo code A1 Trading for 35% off. Thank you again to Ola Prime for sponsoring today's video, and now back to the content. And in terms of cueing me into potentially taking a long position, I really would like to see the 20-day moving average get recaptured, as well as that 4,200 level of support. Those would be levels that I feel really confident in taking a short-term bullish trade on gold to the long side, so long as the macro fundamentals stay aligned how they currently are. Let's also shift our focus here a little bit to the DXY, which also matters for precious metals traders because a softer dollar is potentially a nice catalyst for gold. It also goes in line with the concept of yields moving lower. They tend to move generally in the same direction. That, of course, is because the dollar is very sensitive to what's going on geopolitically as well as what's going on with monetary policy. And if rate hikes are going to get priced out more and more, if that is the story, I'm not saying it is, but if oil prices were to fall, things were to de-escalate, you could see a crack in the dollar, which would certainly give us that kind of breakout trend momentum to the upside that gold very desperately needs. Again, I'm not making the call that I think that's going to happen because right now when it comes to the dollar, in fact, I'm actually not sure. Let me check what my latest reading. Yeah, we're still very flat in terms of bias on the dollar. And so I'm not really willing to make the big claim of like, oh yeah, dollar's going to crash lower and I'm going to full out go long gold. I'm not quite there yet. And believe me, if the time comes and my system has that reading, then I will go for it. In fact, I've mentioned this a couple times, but I've been getting a lot of feedback of people saying, Nick, your system is too mixed. You're getting too mixed of a reading. But understand that that's actually intentional. There are times where it's okay to be neutral. There are times when it's time to be bullish, there's time to be bearish, and as the expression goes, there's a time to go fishing. And I think that when it comes to trading, you don't always have to have super strong conviction on an idea. In fact, you can sit idle and wait patiently and stalk your prey, if you will, for the right setup until it comes your way. And I think that that's perfectly fine. And you know, again, although I am making content for YouTube and trying to keep this entertaining as well as educational and insightful and all the good things, I'm not going to force trade ideas or trades that wouldn't meet my criteria just for the sake of content. I just won't do that. Obviously, I'm trying to make money in my trading, so I want to do the best that I can. And there are times to wait patiently for setups. Let's also take a look at stocks because they are impressively holding up their gains here on the S&P 500's daily chart. We're sitting at pretty much all-time highs. There's an interesting divergence here happening though, where the NASDAQ is looking weak right now, down 0.5% or so today, and not as close to all-time highs. The NASDAQ is still about 4% off of its all-time highs, which is not crazy, but certainly a little different than perhaps the Dow Jones, which looks fairly strong, and the S&P 500. These things are in strong upward trends. Let's take a look at stocks, which might actually be getting closer to a reading as well. NASDAQ's got a +0, SPX has got a +1, so maybe not so strong. What's interesting to me though is oil is actually getting close to a potential breakout score as well. With cooler inflation, that is a positive for oil prices in the sense that it could mean keeping interest rates lower, economies keep stronger, demand for oil stays firm. So we are seeing a little bit of an uptick in scoring for oil today following the producer price index and consumer price index. So there's a possibility that I could be looking at some oil longs coming into the picture as well, which kind of contradicts my gold bullishness. But again, I'm kind of on watch for both of these. For oil, for me to get bullish on oil, I'd probably need to see some kind of a significant breakout here around back into the 90s, maybe high 80s. I'd be watching it for breaks and retests. Of course, we'll be watching the latest commitment of traders data as well, which comes out on Friday. I'm very curious to see what institutions have been doing in all of this, as there has clearly been some massive activity in the options market recently. It is worth mentioning that when it comes to seasonality right now, the stock market is sitting around all-time highs, as you can see here, but also is expected to generally have a decent rest of the summer. That is until you get into August and September, I should say. So I guess just the rest of July is seasonally strong. So we'll see if that happens. But once you get into August, into September and October, that's historically speaking one of the weaker periods of time in the, the average annual year. You can see the last 10 years, that's been a weaker period of time. So perhaps the stock market has a little bit more room to hold up gains. And then maybe if seasonality plays out, maybe we see a little bit of softness in stocks. And gold is sort of playing alongside seasonal trends here, actually pulling back very sharply in the last few months. But you can see it followed the start of the year looking decently strong, then kind of fell apart. apart, actually broke seasonality here. You can see we completely fell apart in gold when historically speaking, it was a strong period of time. So it's not a perfect indicator. Nothing ever is. Use it in combination with your other analysis. But a lot of traders really like the seasonality tools. And one thing to mention here is look at gold in the months of August and September. Perhaps there is some room for gold to have a recovery in the second half of the year if seasonality has something to say about it. We are kind of getting through the tougher period of year for gold, so we'll keep an eye. Like I said, don't miss the chance to get access to all of our tools down below in the description during our summer sale event. Now, one thing that I think is really important for us to talk about is how much can we trust this CPI and PPI data. Today, I talked about it with my friend Johnny Hart on the Market Insights Market Pulse podcast. Check out this clip and search us up on Spotify if you want to find the full episode. And inflation has been, of course, a huge concern of this market.